Hello media listeners, in this video today I will continue to explore how the American deficit and treasury market is affecting our financial assets, gold, precious metals and cryptocurrencies. And so the news that is going around about latest 30-year bond market, I'm gonna link this article. You see, it's already flashing everywhere. It's flashing everywhere. And let's listen to what this analyst has to say. I think it describes very accurately the situation.
New record highs literally every single month. In the past 4 months, the US borrowed $1.5 trillion, and it plans to borrow another $1.5 trillion over the next 6 months. But there's a bit of a problem. While the Treasury Department is issuing more and more long-term debt, fewer investors want to purchase it. It's no longer in demand. Even Ken Griffin, the CEO of Citadel, said in an interview this past week that the United States, and this is a direct quote, is spending like a drunken sailor. Something quite shocking happened. On Thursday, November the 9th, the US government attempted to borrow $24 billion by selling its newly issued 30-year treasuries. The auction did not go as planned. It went poorly. What's even worse, a day later, Moody's lowered US credit outlook from stable to negative as the result of, quote, political polarization and irresponsible government spending, or using more politically correct terms, growing deficits. The US AAA rating.
So you see how this situation is evaluating, and let's step back and then try to analyze. I'm curious how the American government and Treasury and the Federal Reserve going to play out this in the next 6 to 12 months. What they can do, because this is obviously politically there is no possibility to do any amount of cuts when everyone is expecting. The markets you have elections coming. The markets are not pricing any austerity right now. Like if the markets start pricing austerity, it's going to be very ugly. Every like a pension fund, every investment, everything is going to unravel. So we already each time I try to play the deflation type of scenario, it's unravels so quickly, and the government is going to lose control, and it will end up in a hyperinflation anyway. So they will try to inflate, but they will try to inflate because they need this ability to get something from nothing. Basically, this situation with the deficit. One thing, for governments like United States, Canada, UK, European Union, Australia, it's a little bit like we're getting something for nothing, because we understand that this debt is never going to be repaid. The value, basically, maybe it's going to be repaid nominally or restructured some kind of, who knows. But this is basically what the rest of the world allows certain countries to spend without, it's a free gift. It's a free gift. That's how it's my personal opinion, how I understand the situation, because if you go, let's say, to the countries like Nigeria or Venezuela or Cuba, why they cannot run $1 trillion deficit in the next 6 months? Because the political system and the global system is not designed. It's designed to consolidate debt around a few countries and then redistribute it to the few dedicated people who are supposed to get it. And we are kind of fortunate. We by default are also benefiting of that as being citizens of those countries in social systems and all government benefits and consumption. So they will try to protect it at all costs. They will probably try to do a little bit of austerity. A little bit cuts, and not austerity. They will try to focus everyone's attention on that. They will. I don't know if they're gonna they will most likely continue to lie about inflation. The inflation is going to be severely understated, like it used to be. Now we're gonna also enter the period where is the job market will start to contract, because everything related to consumption is unraveling. It's gonna unravel even faster, because the people are so leveraged, and we are at an inflection point where it's going to become obvious. So in this situation, you have falling government deficit, falling consumption, a contracting economy, rising inflation, de-dollarization, and people choosing buying gold. it's around the world. Let's listen how what are the biggest investors like China is doing. Let's listen to that.
And ran its way up to $850 an ounce. Two reasons: one, inflation; two, big central bank buying through that whole period. So what are they doing again? Started last year with record amounts of buying, the largest we've seen in 50 years. So that would take us back to the late 60s, early 70s. And this year, they've exceeded that again. So you're right. China has been purchasing like crazy. I just got a report yesterday. The demand from China is 14% ahead of the same period last year. Biggest buyer in the world right now. They added 23 metric tons last month alone. That's a lot of gold. That's 740,000 ounces of gold. Clayton, when a central bank purchases gold, they don't purchase. They're not day traders. They don't buy today and sell tomorrow. They buy today and they hold for 10, 15, 20 years at a time. If central banks are pulling that much gold out of the market, then you're going to have gold prices near the highs because you don't have enough gold to go around to the rest of the people. It's going to fluctuate. In my opinion, it'll fluctuate in the 1900s up to the 2000s, and it will have its breakout when there's just no physical gold to supply. So if we see this record demand end up in the last quarter of this year, first quarter of next year, you get a recession, that continues, then you get the individual investors coming in because they're trying to protect themselves. What happens to price when you have an increased demand on a fixed supply? It goes up. So that's why people are talking about $2,700 gold, $3,200 gold, possibly into 2024. So I believe gold's a great opportunity right now. Great hedge against higher interest rates, great hedge against inflation, and great hedge against the recession. We've already seen all of that happen with gold previously.
So $3,200 an ounce for gold. It's nearing 2,000.
Okay, so the gold is going to be back into the favor, and this is another thing that the central banks and the government, they have to suppress price of gold because this is ultimate currency where it's going to get most of the reserves going to be consolidated. Maybe it's going to take 5 years, maybe it's going to take 10 years or faster, nobody knows. But I'm looking at this on a near term, what we can expect. We just bounce from this trend line. If we start closing below this trend line, maybe we're going to go lower and test this high 870 this zone if the gold continue to drop. But I got the feeling we're gonna in a few weeks before the end of the year, how it looks like we're gonna go up and test this. Like I have this alarm at $20,020. Probably if we test that again, the road is open to the all-time highs because it's gonna be 1, 2, 3, 4. It's gonna be fifth time that we're gonna test that resistance. And then sky is the limit, and it's going to look very bad for the treasuries. The point of this video, so the people understand who is watching, that the treasuries eventually they're not going to be considered as a safe haven asset. And once this happen, this is going to be game over for all this possibility to borrow, issue QE and spend, get something for nothing, spend the money. The government will need to be really go back, and imagine how life is going to change if we have to go back and the government will only allow to spend what it takes in taxes. It's going to be very, very different environment from what we know now. Well, it's going to be good because right now what's basically we get the government that's the only one that is allowed to spend, and they spend basically. There is no eventually free stuff because somebody taking other side of this trade of this deficit. When the government spend run a deficit of 2 trillion, somebody actually losing that's 2 trillion. And who is this? This is people who have money, and this is international community who don't have this, who have run a trade surpluses with United States, China mainly. Who run the biggest trade deficit, and you understand they are not interested to subsidize American consumers, so they're trying to get out of this peg for years. Now the other assets, if that I believe it's not a financial advice, do your own research, but something I think this is a cryptocurrency XRP. Well, it's a daily chart. If we start closing over 60 cents level on a daily, I think we could go in and test this 12 months high of 93 cents. If not, if we're gonna retrace to this area 57-58 cents with the Bitcoin, if Bitcoin retrace to 33,000, it will be a good buying opportunity. So this is gonna be everything for this video. Please like like it if you to help me to get more views. If you like the content, please comment. Thanks for watching.